Well, hi everyone. Welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is August 23rd, 2025. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Well, the market tested most indices' 20-day moving averages, but it wasn't until Friday that the market showed its resolve, which was a trip to the upside. Yeah, Fed Chief Powell muttered words that he was thinking about interest rate reductions this year, and that just sent the market shooting up almost 1,000 points at one point for the Dow Jones Industrials. In our weekly stock analysis video, we're going over installed building products, and that stock symbol is IBP, and it's one of our favorite home construction stocks. It's up 58% this year alone. Friday, and it's in our growth portfolio, by the way, and Friday's encouragement of an interest rate reduction sent this stock soaring. In our ETF video, well, after Friday's move in the Dow of almost 1,000 points, we just can't stop from smiling because we have some home building and home construction ETFs that are moving. One tripled over the last 10 days. So, folks, we're looking at some pretty heavy movements here in this market. And let's look at the S&P 500, and the S&P 500 is not up 28 points this week, so that's a mistake. In fact, we're down just a little bit from last week. But let's go over here, and we're looking at the volatility bands, and we can see that a little bit more than a week ago, the market actually went above this Bollinger Band. Now, this volatility band is called a Bollinger Band, and so when that happens, usually it'll come back and try to make another high. And folks, it just started drifting down, got stuck at the 20-day moving average here Thursday. It fell a little bit below it, but it fell on lighter volume. And so that was telling us that this market, even though our indicators are pointing down, does not want to fall just yet. And then all of a sudden news came out that Powell's thinking about a few interest rate cuts this year. And with job formation slowing down, and this week the unemployment claims went up, so he's got to worry about unemployment, or I should say he's got to worry about employment. And just the words that he didn't say, no, he's not going to lower interest rates, or no, he's not going to raise interest rates. Anyway, he said he's thinking maybe. That was enough to send this market, well, on the S&P up over 100 points, and we're going back to try to make that high once again. And this indicator down here was pointing down, and that was telling us, and we had some short-term indicators pointing down, and that was telling us that this market kind of wanted to go down, but not heavy volume here on the downside. These red lines represent the market, or this particular index or particular stock that we're looking at. If it's red, that means it was a down day, and this is the volume. So we didn't see any volume pick up like over in here. And this was Thursday right here that I'm looking at. And folks, that kind of gave it away that, boy, this market wants to go up. It just needs a little impetus. And here we are at the S&P 500, and we're looking at that 20-day moving average. And we're looking at one of the indicators up here was just pointing down. And then Friday, all of a sudden, it started climbing back up, and it's got to surpass this red line to give us another high in here. And it all depends what is deciphered over the weekend relative to interest rates, because don't forget, the Fed meets in a couple of weeks. So let's see what happens. But yep, this 20-day moving average held, and when the 20-day moving average holds, it'll hold it for a while before coming back down and breaking it to the downside. So right now we think we have some more upside action in here, and we've got to test this old high right in here. And I'm recording this just before the end of the day on Friday, and boy, maybe we will before the end of the day. And then when we look at the QQQs, we're seeing the QQQs did fall below the 20-day moving average. Look over here. Fell below that 20-day moving average, gave everybody a scare, and then took off again. Let's go back to the S&P and we can see that even the S&P fell below its 20-day moving average and closed below it right here the last time we went down. So let's come back to the QQQs. Here we are. Same thing exactly as the S&P. Gave everybody a scare when it closes below that. Of course, then we look at the 50-day moving average, which is the next line in the sand. And this time the S&P almost did go down and test that. That would have been nice. It would have given us a buy signal real quick. But here we are now above that 20-day moving average. This indicator is turning around a little bit. We'll see what happens on Monday. And the SPY is 645 right now. We have these SPY puts. This is about a $150,000 portfolio. And 3 SPY puts. Remember, the SPY is 1/10 of the S&P 500. And we have 3 puts to cover the $150,000 portfolio, and we spread them out all the way September, October, November, 1 in each of those months, because we usually go into a week period. And that's what was scaring the market all this week, right up until Friday. This is usually a week period in here. And so we'll see what happens, but we're protected. For those of you who want protection, we have the protection here. The SPY is 645, up just 2 points this week. So you can see it was a pretty much do-nothing week, but it gave us all a scare. And then the QQQs, some of you buy the QQQs because you have more of the tech stocks in the portfolio, and it is actually down 3 points for the week. But we have the same protection dates for this coming 3 months, September, October, and November. So if there's any kind of weakness in here this time, we'll have some protection in place. So folks, it was a do-nothing week, and the market just kept crawling to the downside, and then Friday all of a sudden it gave us the lift that we need so we could smile all weekend long. So folks, go out, be with your family, take your mind off the market. Most of all, be safe, and we'll see you back here in a couple of days.